Starbucks, a multinational corporation that operates more than 38,000 locations and generates approximately $36 billion in net revenue, has been a symbol of coffee culture all over the world for a protracted period of time. The brand of the company is one of the most recognizable, and it is synonymous with high-quality coffee, an exceptional experience for the consumer, and a lifestyle that is aspired to be lived. However, in recent years, Starbucks has been confronted with considerable problems, and the once unshakable market leader is now struggling to deal with a shifting landscape of consumer behavior, economic pressures, and intense competition. Over the course of its history, Starbucks has seen consistent growth, particularly during the period of market recovery following the epidemic. 21 years after the global health crisis, the stock price of the corporation reached an all-time high of more than $125 per share in the year 2021. In spite of this, the rise did not continue. By the beginning of 2022, Starbucks was experiencing a precipitous collapse as the company's stock price plummeted as a result of a confluence of internal and external challenges, especially after workers in a number of different sites campaigned for improved working conditions and benefits. The corporation found itself in the middle of an ongoing conflict with unions. In addition, the protracted impact of the pandemic on consumer behavior, particularly in markets such as China, became even more severe. Furthermore, the company's troubles were further compounded by the fact that profit margins dropped and costs increased. In 2023, Starbucks made an effort to reverse its negative track by proposing ambitious plans to reinvent its operations. These plans have not been sufficient to stop the firm from continuing on its downward trajectory. The difficulties that Starbucks is facing have become more severe in the year 2024, as the business has recorded consecutive profit misses in both of its first two quarters. Even though the business's earnings per share for the third quarter were in line with what Wall Street anticipated, the company nevertheless failed to meet its revenue projections by a total of $130 million. As long as the company maintains its dominant position in the global coffee market, it appears that the company's long-term prospects are still promising, despite the problems that have been identified. It is becoming increasingly challenging for Starbucks to reach the same level of customer loyalty and sales growth that it formerly had. The company's revenue continues to be robust, but its growth has come to a standstill. A shift in the behavior of customers is at the heart of the problems that Starbucks is experiencing. A consumer who valued premium experiences and was willing to pay higher costs for convenience and quality was the target audience for Starbucks for many years. This consumer was an aspirational consumer, as a result of inflationary pressures and a public that is becoming more price-conscious. A significant number of Starbucks' once regular customers are reducing the number of times they visit the company, choosing alternatives that are less expensive or not placing any orders at all. It is clear that this shift is occurring because there is an increasing amount of orders that are left unfinished on the Starbucks app. Customers are giving up on their purchases because of the lengthy wait times or increased prices. As a result, Starbucks has been attempting to streamline its operations by reducing wait times and improving the entire customer experience. However, it is still unclear whether these efforts will be sufficient to meet the needs of the company. One of the most major challenges that Starbucks is confronted with is the fact that its premium pricing model is becoming increasingly difficult to justify in a market that is increasingly focused on value. It has become necessary for Starbucks to compete with other businesses, such as fast food chains like McDonald's and convenience stores, which have increased the amount of coffee they sell at costs that are more accessible. Although McDonald's latte prices have increased by more than 40% in the same time period, they are still lower than those of Starbucks. The price of a latte at Starbucks has increased by approximately 25% between the years 2020 and 2024. Starbucks has been forced to reevaluate its position in the market as a result of a shift in consumer behavior toward the pursuit of finding greater value. In an effort to attract consumers who are more concerned about their financial situation, the company has lately released a cheap pairings menu. This new approach to promotional products represents a significant move for a brand that has always been associated with a premium experience. Starbucks is still a prominent player in the coffee industry, holding 26.5% of the market for coffee and snack shops in the United States, despite the issues that it is currently facing. The expansion of the company, on the other hand, has slowed down, and it has been having a difficult time finding the appropriate balance between preserving the luxury brand identity it has established and providing the value-conscious items that customers are demanding at the moment. Despite the fact that Starbucks is not in immediate danger of losing its relevance, the company's potential to resume growth and restore investor confidence is contingent on its capacity to adapt to the changing market. The company is working on a number of different operational changes, one of which is the implementation of the Siren Craft system, which is designed to maximize the effectiveness of the in-store staff and decrease the amount of time spent waiting. If they are carried out successfully, these efforts, combined with the introduction of new product offers, have the potential to help resuscitate Starbucks' fortunes. Activist investors like Elliott Investment Management, which is collaborating with Starbucks to boost both its stock price and its strategic direction, are providing the company with guidance. In spite of the fact that the future is still unknown, Starbucks is making an effort to adjust to a new reality. The company has acknowledged that it needs to re-engineer its business in order to stay up with the shifting preferences and habits of its customers. One of the most influential coffee brands in the world, Starbucks has the potential to restore its position if it is able to effectively manage these hurdles. It is yet to be seen whether these improvements will be sufficient to reverse the company's current struggles. Yet, Starbucks continues to be one of the most prominent coffee brands in the world. In the end, the path that Starbucks has taken during these challenging times is reflective of a larger trend in the retail and food service industries, which is that even the most powerful firms need to develop in order to respond to altering consumer demands. Starbucks may very well find its way back to growth, given the massive resources it possesses, the widespread recognition of its brand, and its long history of innovation. Nevertheless, it is necessary for it to confront both its internal and external problems head-on, employing a distinct strategy that integrates effectiveness, value, and products that are centered on the customer. It will be the ability of the company to adapt and rebuild that will determine whether or not it will be able to keep its position as the top coffee brand or whether it will risk losing ground to its rivals. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.